All right, let's get right into it. Welcome to this explainer. Today, we are tearing into CME Group's massive Q2 2026 earnings report. We're going to unpack the actual numbers to see exactly how they pulled off this historic performance and figure out what is really driving the world's leading derivatives marketplace right now.
Here is the roadmap for today. We'll start with a record-breaking first half. Then we'll be unpacking the revenue streams. After that, we'll dive right into volume and capital efficiency, and finally wrap things up with returns to shareholders.
Okay, part 1, a record-breaking first half, the strongest in CME Group's history. Let's see what that looks like.
You know, when a company with the massive legacy of CME Group has its chairman and CEO, Terry Duffy, literally calling the first half of 2026 the strongest in history, well, you know the underlying metrics are going to be pretty exceptional. He pointed directly to record trading in Q1 and their second highest Q2 volumes ever as the main drivers.
And that success, it translates to a staggering $1.7 billion in total revenue for the second quarter alone. $1.7 billion? That massive top-line figure is really the foundation for everything else we're going to look at today. When you stack up Q2 2026 against the exact same period last year, the bottom-line growth just jumps right out at you. Net income rose to $1.04 billion, and basic earnings per share ticked up to $2.89. It's just consistent, undeniable growth at a massive scale. Moving right along to part 2. Unpacking the revenue streams. Where exactly did that $1.7 billion come from?
If we look straight at the consolidated statements of income from the report, we can trace the raw accounting detailing the exact lines that funnel into that billion-dollar operational income. Yeah, it stands, but hey, this is the absolute, unvarnished truth of the business.
So breaking that revenue down, it's pretty clear that the lion's share comes directly from clearing and transaction fees. We're talking $1.35 billion of the total pie. This right here remains the absolute core engine of CME Group, facilitating trades and managing the clearing process on a global scale.
But check this out. While transaction fees obviously lead the pack, market data revenue experienced a massive 20% growth surge compared to last year, hitting a record $238 million. I mean, think about today's highly algorithmic trading environment. Premium data is essentially oxygen, right? And CME Group is monetizing that relentless demand incredibly well. All right, Section 3, volume and capital efficiency, driving the core engine. Looking at the actual volume, this narrative of sustained growth really holds up. Now, Q1 was an absolute record outlier at 36.2 million contracts traded daily, but Q2 held incredibly strong at nearly 29.8 million contracts. That actually stands as the third highest quarterly average daily volume in their entire history. This just proves that the demand to manage risk in these markets, it isn't just a flash in the pan. It's a sustained structural trend. Beyond just the raw trading volume, there is another staggering figure buried in this report: $95 billion. That represents a massive, almost hidden value delivered straight to clients every single day during the quarter. That $95 billion represents daily margin efficiencies. Setting a completely new high, these efficiencies essentially act as freed-up capital. By clearing multiple correlated positions through CME systems, traders just don't have to lock up as much raw cash. It proves that CME's ecosystem is highly capital efficient for its users, letting them take those unparalleled savings and redeploy them directly into their own businesses to generate even more yield. It's a real game changer for them.
Now, it's worth noting that while overall volume surged, we do see a slight nuance in the pricing metrics. The average rate per contract, or RPC, across the board shifted down just a hair from nearly 69 cents to about 68 cents. But actually, scratch that, it doesn't mean CME is suddenly discounting their services. Rather, it just demonstrates how varying product mixes impact the final averages. Different contracts, like complex interest rates versus, say, agricultural commodities, carry different fees. So natural shifts in what traders are buying and selling will obviously flex this average rate. Okay, let's hit our final section: returns to shareholders, capital allocation, and continuous innovation. Look, when a company executes a record-breaking first half like this, the corporate machine ensures that shareholders absolutely reap the rewards of that extreme liquidity. CME Group returned over $1.16 billion back to its investors in just the single quarter alone. They executed a really aggressive capital return strategy. They heavily favored share buybacks, repurchasing $695 million in common stock, which naturally drives up the value of the remaining shares. And they ran this right alongside paying out nearly $500 million in quarterly cash dividends. It is a highly shareholder-friendly allocation. They aren't just sitting on their cash or simply handing every single penny back. They are actively expanding their global benchmark products. They launched some truly fascinating new tools this quarter. We're talking 24/7 1-ounce gold contracts for retail-sized access to metals, plus things like single-stock futures, U.S. Treasury clearing, and highly forward-looking compute futures to help clients manage emerging technological risks. They are relentlessly building the next generation of risk management tools.
So, as CME Group wraps up its most profitable first half in history, we really have to look forward. They're generating massive revenues, returning piles of cash to shareholders, and creating literally billions in daily capital efficiencies for traders. With this expanding 24/7 product access and deep liquidity, how will these derivatives innovations completely redefine the future of global market opportunities? It's a fascinating space to watch, and we are definitely going to be tracking exactly how these new tools perform in the quarters to come.